Today, you're going to get two parts. The first is a wet one. The second is a dry one. Now, the wet one is a confrontational rebut. You may like this if you like some fire. If not, go to the second part, which is an update on DBS's latest first quarter 2024 results. But first, let's start with the wet one. How about that? DBS is a popular stock in Singapore, and rightfully so. If you see in terms of share price, it has done well. It's rewarded many investors. It's the best performing bank in Singapore. So highlighting some problems with the stock possible performance moving forward is very difficult because current share price has brought in some fans already. So I've actually swallowed a lot of criticism and it's time I confront some of them. The first one. Oh wells, you didn't take into consideration their improving fee income and use potential NIM drops to justify selling back. Firstly, I didn't say sell back. That was never mentioned in the video. Need to be 100%, right? CEO, he's actually sold before his DBS shares, 100,000 in August 2023. Secondly, you didn't take into consideration their improving fee income. Have you seen this 9.14 minute mark? I mentioned that if this fee income can grow, it could offset some net interest drop, correct? The second one, the argument that rate cut will impact Singapore Bank's earnings are ridiculous. Lower interest rates will cause demand for trade loans to pick up, especially now the demand's still robust. If you expect banks to decline 15 to 20% because of rate decrease, you end up never buying Singapore Bank shares. I replied, the tone sounds harsh, just disagree objectively, and produce some research calculation. I'm fine with it. But it goes on. Disagree with my viewpoints? Come on, Josh. Let's not be glass hearts. You mean I didn't understand that loan rates can pick up as what you mentioned? I've listened to this by CEO and I've even pasted it in 7 minutes 09. Ridiculous that I'm the only one that feels that it could be an operational peak? Really? Let me pull up something by Lim and Tan, who's mentioned also, 26 April 2024, Singapore banking trio have been the biggest beneficiaries of Fed's most aggressive interest rate hike. Singapore banks have seen their net interest margins and net interest income expand significantly, which allowed three banks to report record earnings and also dish out record dividends. However, we note that banks are inherently cyclical businesses and they have been the biggest beneficiaries of Fed aggressive rate hike in the last 2 years. Singapore banks are currently looking like their businesses are peaking out with their net interest margins and net interest income facing downward pressures, with Fed indicating they could cut rates by 2 or 3 times in 2024 and 2 or 3 times in 2025. So, am I the only one that is viewing that banks could have an operational peak? No big deal, but just an operational peak. There's nothing I'm saying that's defamatory to these banks. They are fantastic businesses, but anyway, I'm just voting in line that this could be an operational peak. Then what about this idea or this comment that Singapore banks will not decline 15 to 20% because of a rate decrease? You will end up never buying Singapore Bank's shares. Let's look at some historical data. This over here, if you see in 2018 to 2020, any chance to buy? But before that also, in February to July, there was already a 20% decline. Then how about this taper tantrum period in 2014? Is that also a decline? That is not even including global financial crisis. You'd never buy Singapore Bank shares. That is the furthest way from truth as possible. Now let's watch back on what I've concluded. If earnings slightly disappoint, can't reach that 10 billion mark, that was done in 2023, there is a small chance that DBS stock could drop below the $30 range. And that's why I'm not in a hurry to buy DBS shares. Again, that's not investment advice. If you're a long-term shareholder, these are just cyclical ups and downs. It's much better to stay invested. And watch out for growth in 2025. I would like to reiterate again the first, which is if DBS can't reach $10 billion, there is a small chance that DBS shares could fall. The second is I'm not in a hurry to buy, not you. Anyway, what's the hurry? I've showed before there are times when there's over pessimism on things. That is when as an investor, you have to filter out the negativity and buy. The third, I've mentioned at the last part, it's better to stay invested if you already have, because this is just operational ups and downs. I'm not telling anyone, not telling you to sell. At the end of the day, I'm not a fortune teller. I'm a fellow investor trying to guess what the operational future is, which after some time can impact a stock price future. But again, we're talking about future. The future is ever changing. Now there's a war breaking up in Middle East, then oil price goes up, then inflation expectations go up. If the war subsides suddenly, then inflation expectations can drop. New information surface all the time. And to that point, I have to conclude the wet part because rebuttals like this to and fro, it just isn't very productive. Let's go to the dry part, and this is what I flashed up on the Telegram group. In any case, do join our group. When there's updates, I'll leave there for the community. And this is something I've actually updated everybody, which is from Philips Securities. They've mentioned the moment the DBS has released earnings, the DBS posted a net profit of 2.96 billion in first quarter 2024, which is 15% higher year-on-year and 24% higher quarter-on-quarter. You can smell already, it's a fantastic result. This amount is also way above Bloomberg poll of 2.465 billion, which means if you annualize it, most expectations are below the 10 billion mark. So the first question is, why was expectations for first quarter that low? 20% off. Of course, right now with DBS beating results, you would see that the stock price probably is soaring again. What kind of new information emerged? Let's try to dissect to make more updated calculated guesses. When I first saw the presentation, this screenshot on page 4 suggests how this first quarter net profit of 24% increment was actually achieved. Net interest income is pretty flat. Fee income has grown, that's expected, and I have some details on it. But I've also noted that treasury customer sales and market trading income did exceptionally well. Maybe this is regarding the bull market in US equities as what we can see. And back to the first quarter fee income growth. It's quite evident that right now, wealth management has done exceptionally well. Congrats to DBS on it. And to that point, I'm immediately thinking, OCBC owns Bank of Singapore. So if you own OCBC stock also, maybe there's good results coming up. So let's stay tuned. And as always, if you'd like to be updated, smash our subscribe button and stay tuned. I'll try to give objective assessments, not fortune telling. I don't know the future. I can only share with you candidly what I think and what I do. Back to the point of original estimates looking to be severely underestimated. The first thing to know also, if you are in a similar shoe as mine, we can't quite lose sleep over it, correct? We've missed many boats before. I didn't buy Bitcoin, I didn't buy Nvidia. There are just so many missed boats. Missed boats happen everywhere, not just in investing. It can even be property purchase, it can be someone you wanted to meet and marry. There are just so many instances. We just have to move on and make best decisions moving forward. But I'd like to highlight something of DBS's ROE, which is a record 19.4%. It firstly explains what a fantastic franchise it is because it can achieve such a high level. So as always, keep it in the watch list at the very minimum. And if we use that number to plot against the history, we would realize that this ROE number is really at a high. DBS's last 12-month ROE is at 16.8%, and that's even with the increment in net interest margin. In previous years, the average seems to be about 10 to 12% in terms of ROE. I've tried to hint that DBS and all banking stocks are somewhat cyclical. You may have a different opinion, or you could take my suggestion, or you could agree to wait also. That really depends on you. But much rather than you being never investor, I'll still advocate taking action and buying things that you believe and you like. So with that, I'll use some of Howard Marks's latest memo as a conclusion. And it reads, you miss 100% of the shots you didn't take. You have to give yourself a chance to fail. Not having any losers isn't a useful goal. The only sure way is not taking any risk. Risk avoidance is likely going to result in return avoidance. Taking a chance doesn't mean that there will be a successful outcome, nor does it require one. As long as the reasons are sound, the risk should be taken almost reflexively. The more we trust our judgment, the more confidence we gain in our decision-making capacity. You shouldn't expect to make money without bearing risk. You shouldn't expect to make money just by taking risks. You have to sacrifice certainty. It should be done skillfully and intelligently, with emotion under control. I'll conclude my presentation and hopefully you like this sharing. Smash a like as always. With that, let me introduce you to this previous video, which is a rebuttal to a criticism by a very popular YouTuber. Right now, Chinese tech looks to be finally rallying. haven't seen that rebuttal, check it out, and I'll see you there too. Take care as always. Goodbye.